Hi, this is Morris. So what's happened to your super fund in the last few weeks? Many people are watching the daily unfolding of the twin pandemics of COVID-19 and the resulting economic turmoil with morbid fascination. Nightly, we are bombarded with how much the share market has fallen, and it's easy to then assume that your super fund has fallen by the same levels. This isn't the case. This is a screen of the ASX 200, and you can see here that from peak in the middle of February to trough in the middle of March, the Australian share market had fallen 32.5% from peak to trough. That's a massive fall in a very short period of time. And by the end of March 2020, it had fallen 18% for the 12 months. From March 19 to March 20, 18%, and that meant that it was back to about the same levels as it was in March 2016. In the same period, the average balance super fund has fallen 4.4%. Yes, they have fallen, but nowhere near as much as the share market has fallen. And the reason is that balance funds not only invest in shares, they also invest in property, fixed interest bonds, and cash. Diversifying across asset classes helps cushion large movements in one asset class. The calendar year 2019 was a spectacular year for most super funds, with the average balance fund returning 13.3%, over twice as much as is normally projected. These spectacular returns also served to cushion the effect of the recent drastic falls. The falls were from higher than expected levels. So whilst the share market has retracted by 4 years to 2016 levels, most balanced super funds had retracted by a little over 1 year to the beginning of 2019 levels. These numbers will vary for super funds with greater or lower exposure to shares and property, and that's why it's important to contact your advisor to get some perspective on what has really happened to your retirement savings. It's unknowable how deep the falls will be or how long before we return to some previous highs. It is right to be concerned, but don't be panicked into making the wrong decisions. Speak to your advisor about your personal strategy.